All right, everyone. Welcome back. Sylvia Jablonski from Defiance. We had her on about a month ago, maybe, or a month and a half ago.
Yeah, I think so.
We went over the funds. At the time, QQQY was exploding. It was everywhere. Sylvia, would you mind just giving like a quick recap for anyone who didn't see the last video of like your background and how you got to where you are now? Because you were probably the most, I would say I see you on just about every financial hub there is. I think you're probably one of the most interviewed CEOs there is in the ETF space.
Yeah, sure. And thanks for having me. Thanks for having me back and interviewing me. It's a lot of fun. Yeah, I mean, my background has always pretty much been like finance and econ. I knew, kind of from a young age, I love markets and used to talk with my parents about them over dinner, and I was interested in stocks, and that was kind of, my first part-time job, I guess, is trying to figure out like how to trade birthday money and stuff like that. And so studied it in school, and then I ended up working on an equity derivatives desk at one of the big banks, and spent a couple of years there, kind of learned the ropes, and then I started my career in the ETF space. So in early 2009, I joined Direction, which is a levered inverse ETF company. Was there kind of pretty close to the beginning of their inception, and I spent more than a decade there. And while I was there, I worked with our original founder and chairman, Matt Belsky. We worked on the same team. We were, kind of working together for years trying to build that business. And, he left to start the company. We always kind of knew we wanted to do something together. And so I came over and joined Defiance as the CEO and CIO. And it's been, I guess, a little over 4 or 5 years now. We're a startup, but we're kind of chugging along and growing now. So a little bit like past the startup phase, I would say. And yeah, super, super psyched about what I'm doing.
That's awesome. Well, thank you for the recap, and I'm glad
Sure.
you're here. I'm glad you joined us. And Defiance, when did you guys go over the 1 billion mark?
Yeah, well, so with ETFs, when you're like an ETF startup, it's actually like a really tricky benchmark, right? So we got there kind of quickly, I would say, because we had a 5G ETF that really started to take off during COVID. So try to think that was like around 2020, and then we had SPAK, which is now closed, but that ETF, I think it hit like 100 million in a really, really short time, in a matter of weeks, when SPACs were all the rage. And then all of a sudden SPACs, crashed and burned. And so did that ETF. It went down to, kind of nothing. Not nothing, but, we ended up closing it because there was just no more interest in it once the assets flooded out of it. And then, we kind of sat around the $800,000 mark for a year or two. We had like a 2022 tech wreck. We have the first and kind of like best machine learning AI ETF and a 5G ETF. And those are both arguably very tech heavy, and markets pulled back and didn't do us any favors. And so, we really had to reinvent ourselves and diversify our product suite and figure something out. And so that's, last time I was on with you, kind of like the next foray into hitting over a billion was with QQQY, JEPI, and IWMY. And so those are, the enhanced income products that we talked about. Like basically we pay these outsized monthly distributions through the use of put writing strategies. And, those gathered 500,000 or more right away, like within 3 months or so. And that really put us on the map. And we got back to a billion, maybe a little over a year ago again. And where we are today, we're kind of just under 2 billion. It's 1.8, but optimistic that we'll be at 2 before the end of the year. So it's been a good story. But we've certainly been, I always joke around with our chairman, like if we had a theme song, it would be probably, I don't know if anybody knows this, but this was like something that like I used to listen to in college, but like the Chumbawamba song, I get knocked down and I get up again. I don't even know the name of the song, but
I think everyone knows that from like their eighth grade semi-formal.
yeah, something like that. I mean, I don't even know when the song came out, to be honest, but I can't even recall where I was and when, but I feel
I
like it came
think
out yesterday, or maybe in college, or maybe not, but that's us, right? Like we get knocked down, we kind of like, we've been, super scrappy. And then I think, we've learned a lot, and we've tried to get smart and diversify, and we really took some risks. We put it out, put it all out on the line. And, our latest launch was a bunch of levered funds. And, lucky for us, I think we had a couple that investors really loved. And so that got us to this 1.8 billion mark now. So we're, happy to be here.
Okay, and we're definitely going to get into the leverage funds because that's huge interest. But recap real quick: 5G kind of put you on the map. Is
Yeah.
there a talks in Defiance for a 6G?
So it's funny that you asked that. That's a great question because we changed our ticker to 6G.
Oh,
And
okay.
yes, and that became effective just a couple of weeks ago. And the reason that we did that was because, we think that the next, kind of evolution of connective technology is going to be 6G, right? So you're going to need 6G for all of the things that we talk about, like quantum computing, supercomputing, artificial intelligence, smart cities. For all of these things to happen, you're going to need 6G. And in our minds, what is 6G? I mean, it could be a company like, like the stuff that Elon Musk is doing with the satellites, right? Like once they start going public, and you have this whole new sector that people are going to want to invest in. And I think that naturally falls into a 6G.
Sure. Could there
Starlink.
be now part of that 6G and AI revolution is the energy component. Now, recently I just read that Mr. Bill Gates is building these nuclear reactors out of, I think it's out of sodium, and I believe
Yeah.
they detonate salt under the sand, and it creates so much potential energy that they can capture, and it's like a nuclear reactor, but it's kind of underground. Um,
Yeah.
is there any sort of a mood trend in that direction?
Yeah. I mean, so we launched the uranium ETF for that reason, right? Because we really were reading a lot about nuclear power being, both kind of like the most efficient clean energy resource, which is, plentiful, but also something that can power things like AI and machine learning and these data centers and supercomputing and quantum computers and all that kind of stuff. So we purposely launched the uranium fund for that reason too. And yeah, I mean, you totally make a good point. It's been on the news a lot, right? There's this whole separate AI energy component to things, and it's definitely something we're looking at.
Great. MicroStrategy. You guys just launched a fund. You guys have
Yeah.
two X on MicroStrategy, Broadcom, and Eli Lilly.
Yes. And super
It-
microcomputer.
yeah. And
Yeah.
super microcomputer. Okay.
And super microcomputer. Yeah.
Um, Tell us about those. What was the idea behind that?
Yeah, so it's really interesting because this is like kind of like lessons learned in startup. Like so the name of our company, like if anybody ever goes back and looks at our formation documents, it's Crypto Beta LLC, right? Crypto Beta ETFs LLC. So the whole plan when this company was started was to become like a crypto ETF company. And it's interesting because like all of the things we did, I think we're really good, but we were too early. Like with 5G, it was, it was too early. Nobody had heard of what 5G was. And then all of a sudden COVID hit and everybody talked about like lower latency, high speed stuff. You had Mr. Jonas on TV talking about 5G. Like finally it took off. People said, oh, damn, 5G is a big deal, right? And same thing with AI and machine learning. Like we always had quantum and it just sat there and it didn't collect any assets. And then the ETF ticker is quantum. And then, the ChatGPT moment happened, and all of a sudden that ETF starts taking off because people are like, wow, this ETF is just like a machine learning AI ETF. And so, with crypto though, like we had filings ready. We were going to file for a Bitcoin ETF and, Ethereum ETF and leverage, non-leverage. We had all these different ideas, but we were thinking about them and they came to market a little bit more quickly than we did. And so we quickly transitioned and we were like, you know what is the actual like first Bitcoin ETF? And we thought to ourselves, it's undoubtedly MicroStrategy. Like if you ever wanted access to Bitcoin on an exchange listed product before the Bitcoin ETFs, you should buy MicroStrategy. I mean, there's billions of dollars of exposure to Bitcoin in this company, in this stock, and the plan is to just keep amassing that Bitcoin exposure. And so we thought, and then you look back at it too, and past performance is not indicative of future, obviously, but like if you look back and you run MicroStrategy against like Ether and Bitcoin and leverage and unleverage and whatever, sometimes it's outperforming by 6x, at least by a healthy 2 to 3x on average. But, during some periods of time when both of them rise, it's like 6 times the performance of Bitcoin. And so we thought, our background is obviously levered ETFs, so we have experience with this. We know that day traders love volatile products. We know that people love Bitcoin. There's a lot of Bitcoin stuff out there, but there isn't a MicroStrategy, which arguably is more volatile and seems to outpace Bitcoin. And so that's what we started with. And it gathered a couple $100 million of assets in a few weeks. That's been really successful. Super microcomputer was going that way. We have to kind of see what happens with their statements. But I think if anything, that ends up being like a buy on the dip opportunity. Broadcom, obviously another epic semiconductor company. We just are obviously you can see where we're geared, right? We have like such a high conviction on AI and innovation and stuff like that. And so you have to like semiconductors if you like that stuff. And then Eli Lilly is just, the performance is awesome. It's actually kind of the opposite. It's not a volatile stock. So we just thought that investors might like a little juice on a stock that like pays a great dividend and, performs really well. So that's kind of the mindset there.
So I'm gonna insert something because I don't know how far back you said you guys started as like a crypto ETF. And I remember when I first got introduced to Bitcoin was in 2013. And my friend was mining it. It was $200 a Bitcoin in his basement using a USB drive. And I'm like, this isn't going to go. And I'm like, how do we store it? Like, how do we hold on to it? And then in 2015, I had launched my own ERC20 token. And I had the Securities and Exchange Commission show up at my house and shut it down.
Oh, no way. Wow.
Yeah, it was pretty bad because it was still like, it wasn't a thing. Right.
Yeah.
And then ProShares launched BITO, which hasn't really done anything. And then fast forward, we have MicroSailor and MicroStrategy and everything he's doing. Now you guys have a 2x leverage. Is there, and I've been following this for a very long time, as you can tell, we're coming out of the halvening. Right. So theoretically, MicroStrategy should be falling. Is there going to be a 1x leverage to the downside on your MicroStrategy? Because I would be very interested in that.
We have one. We launched that too. So we have
what is that called?
Yeah, it's short 1.5 and it's SMST, so SMST, short MicroStrategy. And that one also has taken off for the same reason. A lot of people are using it as a hedge for their Bitcoin. And we've actually just filed to change the leverage point to -2x on that, just by popular demand. All the investors like saying what you're saying. We're like, no, get it to 2x. But it's there. There's a -1.5 short MicroStrategy ETF out there. And what's interesting with levered inverse ETFs is like they're trend products, right? And so when Bitcoin's rallying, you can hold that for a short term and you can sell it. And if it's crashing, you buy the short fund and you hedge your bets, or else you just benefit from the short exposure. So yeah, we launched both sides on that one.
So just so everyone's clear, because I don't think anyone accurately explains it. So when you're doing the shorts, because in my mind, I'm like, all right, let's just do a 2x on the S&P 500. The problem is, and there is products out there, the problem is that it kind of gets eaten away. Like the delta kind of gets eaten away the longer you hold it. So it really is a short game. You're looking at intraday trading. You make a point, lose a point. You really want to be, it's a trading product. It is not a buy and hold product.
Yeah. And so it's really interesting. So I think, the products seek to track whatever the leverage point is on a daily basis. So you get the 2x when the fund rebalances. So you do have to hold it from rebalance to rebalance to actually get the 2 beta, right? They're short-term products because they are, kind of highly volatile products. So you always say trend is your friend with these products. So if you had held a 3 beta tech ETF for 10 years prior to 22, I mean, you would have been up 10,000%, right? But now we have volatility. So now, the markets are a little bit volatile. So if you have, let's say you have a 3 beta tech fund, right? You're up 5% on day one, right? So that's plus 15, but you rebalance the fund, increase your exposure. And day two, if you're down 5%, you're actually going to be down 2.75, right? So what happens is you rebalance, you buy more exposure as the market goes up. And so when you have a down day, your losses are exacerbated. But range bound volatility is kind of terrible for these, because if you kind of go like up and up, you have more exposure, you go down, you lose more, but if you have a short fund and it's up, it's underexposed for 2 days. And then, on day 3, when it's down, you're kind of just catching up to your baseline notional. So it just depends on, you have to have an opinion on like the direction of the market and the volatility. But if markets are trending, if there's low volatility and markets are trending upward, you'll probably get more than 2 times the daily performance of MicroStrategy or whatever it is. But if it's choppy, you're probably going to have more decay and lose more, for sure, than you would if you were just holding the single stock. So it's more of like a look at it daily, make an active decision daily. It's not a set it and forget it product.
That's the Eli Lilly.
Yeah, but even that, right? They could have like a bad FDA result, and and it's been up and up and up, and then it crashes, and so they're definitely short-term products that have to be monitored and rebalanced. There's all these studies that have been done about like, what do people actually do with these? And it's really interesting because I talked to RAs who say like, I mean, there was a guy on TV the other day, can't remember who it is, but it's like a major football owner, and he was talking about how like he had a 3 beta financial ETF for 10 years, and everyone told him not to do that, and he's up like 30,000 per, I don't know, some crazy number, right? But so that can happen for sure, but you can also be down hundreds of percentage points if there's volatility. So the study though showed that most investors, like retail investors, hold it for a period of time that's less than 2 days. So people are using it the way they're supposed to be. And for those guys that are like the RAs that, have a hedging strategy and hold it longer, that's perfectly fine too. Just like understand what can happen, I guess.
Now, I know you started, as you said earlier, oh God, I just lost it. The company you started with before this.
Direction.
Direction, yes.
Yeah.
They have been instrumental. Now, just something you might want to consider is you can actually, I've been getting text messages every morning, and you can set your parameters, and they'll notify you whether or not, something moves up or down 4, 6, whatever you set your parameters at. And they'll send
and you can do that to your trading account too. Like most people do that in their trading accounts. We find like on their Schwab platform or whatever. But yeah,
but they only send it out once with like Schwab. They only send it out that one initial time. It's not like a constant reminder.
Oh, right. Okay. Yeah. No, that's cool.
It's something to consider.
Yeah.
And you guys can't do 3X. Is that right? Wasn't the law changed? Whatever's grandfathered in?
Yeah, that was grandfathered in. So that's just Direction Pro Shares have their 3 beta products and nobody else can launch them. So 2 is the max now. I mean, people do other things like you can have, I mean, gosh, there are ETNs with 5X, right? But they're not in an ETF wrapper. So if it's in an ETF wrapper, which is basically under the 1940 Act of the SEC, then it's 2X is the limit. But people get creative with exchange traded notes and debt instruments and stuff like that. So there's a lot of leverage in this world. It's so interesting because like for the longest time, levered and inverse ETFs got such a bad rap, and we would always be like, but there's like these products that have like 10X leverage embedded in it, right? But yeah. So.
I mean, buying a 2X leverage ETF on margin,
exactly,
would that be considered 3X? Like you're gonna find a way around it if you want.
Yeah, exactly. Yeah, there's a way.
Okay. Now QQQY suffered a reverse split.
Yes.
And I use that word loosely. Was that because the NAV was falling too much, or was that because there was just too much trading going on? What happened with that?
It's just a NAV. I mean, when you're paying out these massive dividends, it's really interesting with these products because I think a lot of people will just look at the price and they'll think like, oh my gosh, this is terrible, right? They're looking at price return and they're not factoring in like the 100% dividend that annualized dividend that we've been paying. So the total return of the funds is great. It's been, they've been juicy returns on all 3 of them, but yeah, when you pay out this huge dividend, the NAV tends to decay a little bit, and it's whether it's an income product, whether it's a levered inverse ETF, whether it's a single beta stock ETF, like once ETFs start falling for whatever reason, you don't want to essentially, it's due diligence, right? And it's doing the right thing by the shareholder. You don't want to wipe out the fund with a big market move. And so you do a reverse split and get them into like a healthy, kind of liquid trading area so that they can keep going and growing. So
And now does Defiance give out all of the income generated in the month, or do they hold some back?
yeah, I mean, we've always given it out. That was, you know, that was kind of what we thought we could do. I mean, so any ETF out there, whether it's like us or, you know, our competitors, you can hold it back. You can do a return of capital. You can kind of like ETFs in general have to pay out most of their income to investors. So an ETF company can't like really keep it and do something else with it. But yeah, we've paid it out. You can keep some of it back. You can, you know, do other things with it, but we've always decided to pay it out.
Mhm. Okay.
Yeah.
Um, the Fed just cut basis points, 0.5%.
Yeah.
That's great news for the investor market. Um, I have a suspicion, and I want to get your take on it. I
Yeah.
don't think we're going into a recession. I have this suspicion that things are going to skyrocket, especially coming up to a presidential election, like we've probably never seen before. What's your take? What do you look at the outcome?
Like I'm in your camp. I mean, you as you said, you probably like see me doing some stuff. I'm very optimistic on the stock market. Like I don't think that we're in a recession. I think wages have been steady. People have, you know, consumers have continued to spend. There's still so much cash on the sidelines from, you know, kind of baby boomers and just beyond, like people who panicked and whether it was like COVID or 2022 that can come back into the markets. Rates are going to be lower. Just look at what these companies have done. Look at corporate earnings with this restrictive policy that they've had for all this time, and now that's going to go away. You know, it can improve capex, it can improve, you know, kind of like growth, all these different things, and election years tend to be good. um you know, I think the only like what keeps me up at night, right? I mean, we a few years ago, like geopolitics was, you know, a word that didn't impact our stock markets. And now it's, you know, you have wars in the Middle East, you still have Russia and Ukraine, you have all of this kind of like uncertainty between China, Taiwan, tariffs, like there are all of these existential threats, I think, to the market that could turn things around. But in terms of just like barring any of those things, you know, Iran, I mean, barring any of those things happening, I don't think we're going to be in a recession. I do think corporations are strong. Consumer sentiment has been solid. You know, we're still looking for high single digit growth into the next year. So, you know, it's hard to think that there isn't an opportunity to kind of rally in coming months.
Yeah, I feel like recessions usually happen when interest rates are high, and now they're
Yes,
coming down. And
right.
the last time it was September 18th, 2007, I believe the Fed dropped the interest rate a half a point as well. But we had, you know, 12 times more homes for sale because everything, it was a mortgage crisis recession.
Yeah,
It wasn't a stock market recession.
right, right.
Um, you know, that there's no homes to be built. Yeah, there is
Yeah, there isn't like a
there's
credit crunch, and I mean, yeah,
credit cards, but people are theoretically going to be doing better now with a lower interest rate.
yeah. Yeah, agreed. And you know, we'll see what happens. We'll see what happens with like all the refis and all that kind of stuff. But yeah, I think the election is going to be interesting too, right? Because I think about like what is the market's reaction going to be if we get, you know, if the market is worried that unrealized capital gains are going to be taxed, for example, or like what is the market's reaction going to be, you know, if we think that tariffs on China will be massive. Like either side has its potential to rock the market, but let's see. Let's see.
I don't think there is any. I don't think there's any weight in unrealized income
I
because
agree. I don't think it
um,
can't happen. It won't pass, right? But I
well,
mean,
Congress isn't going to, you know, cut off their
yeah,
nose to spite their face. Let's face it.
right.
You get into politics to make money. You're not going to shoot yourself in the foot.
Totally
That would
agree.
be
But
dumb.
people react to headlines sometimes. Like, look at what happened just this week or last week, right? Like when the Fed came out and he said he's going to do the cut, like that day, the market actually pulled out. I was like, what on earth is going on? Like, I thought for sure there's going to be like this epic rally, which I should, you know, I should know better because every Fed day the market's like that, right? It kind of like putters around, it doesn't find its footing. And then the next day, you know, we had that like 400%, whatever it was, rip in the Nasdaq. I was like, okay, well, that makes a little more sense to me. But I just think that people react to headlines, and it's just the weirdest thing, you know. see the market kind of reacting to things that it shouldn't, in my opinion, but we'll see.
I always call those days Black Friday sales for
Yeah. Oh yeah, me too. And look, I'm the buyer on that day. Like I love when Nvidia falls, like I love buying that stock, when when our quantum ETF falls, like I love buying that stock. I love getting semiconductors for sale. So
do you have a 2x on Taiwan Semiconductors?
we don't. Someone else has filed for one though. But
You can't file one if someone
we
else did?
can, but like it's a first mover game with ETFs. So,
Right.
there are so many single name stocks filed, and we try to come out with things that like don't exist. And it's so hard to play. It's so hard to play Me Too. It works sometimes, but most of the time it doesn't.
Lower interest rates. I'm trying to think of yeah, I wanted some clarity on this one. The VAR index. Now, I had just heard about this term. I know
Yeah.
you're familiar with it. A lot of people don't understand what the VAR is as it relates to the 2x. Now,
Yeah.
from my understanding is, say you have, and I don't know if it's an ETF basis or if a total fund basis. So you can only do a 2x leverage on, is it 20% of whatever the total value is of the ETF?
Yeah, so it's just the purpose of the VAR test is basically to make sure that like if what happens on the days that if the market pulls back 20%, like what happens with this ETF? What is the movement in this specific ETF? And basically, like you need to prove that this is basically going to be a stable 2 beta fund, and that you don't have these massive kind of like drawdowns or beta knockouts throughout time. So it's just like it's a risk thing basically, right? So how do like if you can't pass the VAR test, basically, that means that at a 2 beta fund, the beta exposure to the underlying asset is too high, and you have to lower it and reduce the risk so that when you have those big days, the ETF doesn't break the parameters that the SEC has essentially set for you to meet.
I'm trying to understand. I don't come from that world.
Yeah.
So the SEC has a standard. What is the standard?
So basically the standard is that 2x is the maximum leverage that you can have,
Sure.
right?
Yep.
And so basically you have to also meet these parameters of like what happens on a specific day if the end, like if there's like a 30% day, what is the movement in the underlying ETF that you have or in the underlying product that you have? And it has to essentially be approved by them or be blessed that this is within the realm of the acceptable parameters to run a 2 beta fund under. That's the best way I can, I don't want to speak to them of like, what's the specific percentage number that you can be at and like what the outcome is for them to approve it. Cause it's different. Or I think it's subjective, I guess I should say, but running the VAR is you essentially compare your ETF to another, kind of like product or relevant index that has a similar type of risk profile to your product so that you can essentially prove out the numbers and display to them what happens on the big drawdown days basically and describe that performance. And sometimes they'll come back and say, so what would you do in this situation, or what would you do in that situation? What would happen if you lost liquidity on one name? It's just more or less to make sure that like you can manage the risk of the fund.
So it's to protect the investor from losing, because you
Yeah.
lose
Yeah.
inverse the 2x
Right.
on a down day.
Yeah, yeah. And if you think about like, a 30% move can wipe out 60% of a fund. And so, if you go back through time and you have those moves often, that's obviously, you'll probably get some pushback and say, you're not going to meet, what we think is a reasonable, risk parameter for that product. So change the leverage to 1.75 or change it to 1.5 or change it to 1.2, and then other times, you'll come out and say, well, here I ran the fund and there was no issue. And so I'd like permission to bring it up to 2. And companies have done that before too. So
Now, how does Defiance protect against that downside risk?
So you can't protect against downside risk other than to disclose that there is downside risk, but you can do things like, for example, when supermicrocomputer was down quite a lot, if that around the accounting suspicion, whatever the suspicion, around the accounting documents and stuff like that in the filings. So in that case, like we're kind of just like actively having conversations like, okay, what do we do? It's down 20%. What happens at 25%? So at some point, like various things can happen. An ETF provider may stop taking creations. Meaning like we would allow people to redeem shares in the primary market, but we might not create more. We might go out and publicly say, hey, today we're not going to hit a 2x. We're going to hit a 1.2x because of what's going on in the market. So those are things that, they happened during COVID with levered ETFs for sure. I've lived through this where we've had to go out and say, like, we're not going to get 2x today. We're going to get 1.8 because this index moved 20%. We can't get the exposure from our counterparties. But the rules around this are, making a phone call to the SEC right away, letting them know what's happening, talking with all the exchanges, publicly announcing everything that's going on, making sure investors are aware of what's going on. That's kind of all you can do is like manage the risk as best you can and just disclose, transparency, investors understanding what's happening, understanding their risks. They can sell if they want to, that's kind of how those things work.
Interesting. So it's not like all right, we're down, X amount. We're gonna cash in some treasury bills and we're gonna buy back our fund to raise the price a little bit.
We can't do it. Can't do it. These are passive funds. So the rules-based funds, like the only thing we're allowed to do every single day is to come out with a 2x version of the underlying ETF that we say we track. And we can't deviate from that. We can't, employ a different strategy that is not listed in the prospectus as to like what we're going to do. Because all of a sudden that's like an actively managed fund, right? Yep. So yeah.
Interesting. And where does that extra 2x come from?
Swaps, usually. Swaps and options.
Swaps and options. Okay.
Yeah. So we use, total return swaps, and we use different options contracts to gain leverage.
And then last question, because I know you're busy. I'm sure your phone's ringing. I can hear it. That was me like 20 minutes ago. Like, hey, I just started. Like, I get it. Is there any chance that QQQY, IWMY, Defiance will reduce the amount of or hold back some of the distribution to make up some of that NAV erosion? Is there any future where that happens?
So stay tuned, because we are making some announcements in the next couple of weeks, like in terms of the frequency of the dividend being paid, in terms of potential
weekly.
Could be. Wait and keep an eye out. There'll be some publicly announced information. I can't kind of pre-disclose that stuff, but yeah.
I hope you don't play poker. You have a terrible face.
I do have a terrible poker face. Yeah. I know. And I love poker too, but I'm like, yay, I'm the worst, but, yeah, we're making some changes to the fund. So we're going to address the NAV issues, hopefully maintaining a similar type of distribution that we have, and then changing the distribution profile. So yeah, we're definitely, we've listened, and like I've listened to investors. We see what people are saying in Reddit. We've seen all of the different videos that you guys do and talk about all these products and stuff like that. So, we listened, and we're going to make improvements and enhancements. So
is there an inflection point to where like you could say hold back 5% of the distributions to make up for down days, and maybe you only do a 25% yield?
Yeah, that's not what we're trying to do with these products. So we have products like that, right? We have SPYT, we have QQQT, and for that, we very clearly said, like, we're shooting for target 20, target 20% annually. We're capturing more upside on the NAV, and that's like for the investor who wants that steady Eddie NAV, and the the 20% distribution and whatnot. With these products, like what we plan to do that was different in the market is come up with these really juicy distributions. And so there's some risk in that, right? And if you take that distribution and reinvest it in the fund, or if you just take it and add it in, you'll see that your total return is pretty good, right? But I think like we still believe that there is a crowd that likes these big juicy dividends. But, you know, does that mean we can't do anything to kind of, you know, settle people's opinions on maybe the NAV decay? I mean, yeah, we're very actively discussing that, and have a plan that we'll be talking about soon. So
Would weekly pay make any difference?
no, that's just what investors are telling us they want.
Okay.
So yeah. Yeah.
Okay. Yeah, because I think Roundhill kind of took the spotlight on that one.
Yeah, they did. And, you know, like, so this is, you know, I don't know. I think about these things, right? So different products will do better in different market regimes too. And so like, if you look at, you know, the standard deviation of our product, for example, as compared to the underlying index, or, you know, if you look at like how our products do in down markets, I mean, it's probably going to outperform some of these other products that are out there, right? But because we are in a bull market, and because those products are, you know, kind of capturing more of that upside, I think we do have some challenge with our competitors. And so, you know, it's not lost on us that we have to do something about it. So, yeah, so we'll see. But yeah, it's just investors wanted the weekly dividend. That's where that comes from.
Okay, and you have to refile. Will that change like the fund's prospectus?
Yeah, yeah, we have to file it with the SEC, and so all that stuff will be out there.
And it wouldn't make sense just to have two ETFs that do the same thing, but one pays monthly and one pays weekly?
Yeah, so we will. So the target funds will continue to pay monthly. And the three QQQI, JEPI, and IWMY will pay on a different schedule, basically.
Okay.
Yeah. So we'll keep some monthly and we'll keep some TBD.
How long until we hear something about that?
What's today's date? Like 2 days.
Oh, all right, Wednesday?
Yeah,
Is
you'll hear
that
Wednesday.
the
Wednesday
25th?
after the close. Yeah.
Oh, after the close. Oh, yeah, that's right.
Yeah.
Forgot. And does it automatically take into effect as I'm holding QQQY, does it automatically like Friday, you get paid every Friday, whatever it is, whatever the schedule is?
No, it'll be, I think we'll kind of do the first one in a week or two after the effective date that we announce. So we'll kind of like give some time to, you know, to transition into it, but we'll announce it all. So it won't be a surprise for anybody.
Okay. Well, thank you so much for your time. Is there anything
Oh,
else
no
you want
worries.
to share with
Thank
us?
you. Thank you.
Is there anything else you want to share?
No, just, you know, thanks for looking at our products and talking to me about them. And, you know, if you ever need any information, or if investors need any information, just reach out. We're always around and happy to help. So
Yeah, because you get more inside information than the retail investor gets. Isn't that?
um
And you get more like, I'm going to say at the
definitely
money.
not insider for yeah, there's definitely no
Not
information.
insider, but like you get
Yeah.
faster information as far as like dividends and how like the spread is and what their actual return is versus say like the Schwab or Robinhood account will show.
Yeah, for sure. And we put it on our website, so you can see, you know, you can see all the different notices on the breakdown of the dividend, whether, you know, whatever it is, whether it's a rock or whether it's just a dividend. And yeah, that's all on our website.
Okay.
So, and it's usually there. The dividends are always announced like the night before effective date. And then, you know, you kind of get the notices of the breakdown a couple of days after they pay.
Awesome.
So
Well, thank you again for your time. And
thank you.
this wraps it up. I'll let you get to your next call.
All right. Sounds good. And
All
you
right,
too.
take
Have a
care.
great
Thank you,
day.
Sylvia.
Thank you.
Bye.
Bye.